2, 1.
Everybody. Live from Facebook with us in just a sec, talking about and covering inflation and why it is so critical for why it is so important to understand inflation.
Judah, how you doing?
Investor's perspective. Can you hear
I'm
me?
great, but the audio that I have coming through here, it sounds like you are like slow as molasses. So we're gonna do what we can do and see what happens. I might not understand you. Yeah, the audio is awful. Yeah. Hey, Bayshore, how's my audio? Is it just Judah or is it me also? All right, hold on. We're going to try one more thing. Judah, I'm kicking you off. You're going to reboot. All right, let's try this.
Yeah, see? All right, how about now? Okay. Judah, I think it's you. I think you got to reboot your computer. I love it. Okay, so it's Judah. All right. Well, listen. In today's show, we are talking about inflation and how it's going to impact real estate investment. So until Judah gets back here, this is a one-man band. I'm going to do the best I can to keep this interesting and engaging, and we'll see what happens. So, all right. Thank you for joining us today on the Build and Grow with Real Estate Show. My name is Josh Weidman. Judah Hoover is my co-host. Monday through Wednesday, we go over, we talk about all things real estate, try to do some trainings, and and try to do some really, really cool stuff, learn about real estate. Thursdays, we bring on a guest host, and Fridays, we have our end of the world daily or weekly news wrap up. Last Friday and Thursday, we got ghosted by Facebook. So, we had a lot of eyeballs after the show, but not a lot of activity during it. So I want to welcome you today. Thanks for coming in. And hopefully we can get Judah back on here. Judah, it's your audio, man. Craziness. All right. So let's take a look at some slides. Let's see what we got here. All right, so inflation is a topic that we're talking about mainly because, if you've been watching any of the monetary policy that's been going on right now, we've got historically low interest rates, which is a big deal. You can see, I think year over year, it's like 10.1% increases in median sales price of homes. So, that's probably due to the low cost of money. And essentially, since the beginning of COVID, what the Fed has been doing is pumping a lot of dollars into the economy. The first bailout was like $2.6 trillion, and there's been a lot of additional funds either talked about or actually implemented into the economy. And that money doesn't just disappear. It gets fed out into the economy. People go out and spend it. And in the beginning of inflation, what ends up happening is people just have more cash. They have more cash to spend on things. And so what ends up happening is that you get people paying more for the goods and services that they're buying. This has a definite effect on the economy. And, it's got a big impact on asset prices. The cool thing about real estate and a lot of other assets is when you have more money in the system, they're going to track with inflation, or at least be a good hedge so that you don't lose money. So let's start here. I always like quotes. So I'm going to throw out two quotes here. The first one is from Robert Orban. Inflation is the crabgrass in your savings. Now, one of the biggest impacts that, or the biggest parts of the economy that take a huge hit during inflationary periods are savers. People that take their money and put it in a bank and let it sit there at 0.25% interest or 0% interest. As inflation, as goods and services become more and more expensive, your savings account, though it might not decrease, what you can buy with it certainly goes down. The second quote is from Milton Friedman, well-known economist. Inflation is the one form of taxation that can be imposed without legislation. Pumping more money into the economy equals less buying power. All right. So what is inflation? Like, this is kind of a dry topic. So I think throwing in a little analogy, it might be relevant. All right. So imagine, I don't know if you've ever seen photos like of. I saw something the other day. It was a photograph of an old McDonald's menu from like 1985 or something like that, early 80s. It might have even been in the 50s. But a hamburger was like a quarter, right? A quarter for a hamburger. It seems, dude, it might be your login. I don't know what's going on, Judah. Judah sounds like he's underwater, or he's like this nefarious figure from from some movie. But yeah, okay, so you can buy a hamburger for a quarter at McDonald's, right? This is years and years and years ago. Well, fast forward, what's a quarter cost now? Yeah, all right. So Bayshore jumps in. Quarter for a hamburger, 30 cents for a cheeseburger. Absolutely. Even on the dollar menu now, it's like $1.05 or $1.07 or $1.25 for that same cheap little hamburger. Well, the reason it costs more is because that dollar, that quarter, is worth less than it was years ago when McDonald's first started selling hamburgers. So another good example of this is, we used to be on the gold standard, and, we went off the gold standard temporarily in the early 1930s, went back on it. And then in the 1970s, Richard Nixon took us off the gold standard for good. But let's say you had a 1 ounce gold coin, right? And a 1 ounce gold coin, when it was stamped, maybe it's a $5 coin. Back in 1850 or 1875, you could take that gold coin and you could go and you could buy a really nice suit, a nice shirt, tie, pair of shoes, and a hat. Okay, for that same price, for $5. But it's a $5 gold coin, right? You take that same gold coin today, and what's an ounce of gold worth, Judah?
Ounce of gold is worth like $200 or $2,500 or something like that.
Right, Judah. How much does a good suit cost?
I don't know, like $300. I just bought one for like $150.
A good suit, like a handmade tailored suit.
I'm a Mennonite, Josh. I think, the only reason cleanliness is next to godliness is because frugality didn't get there first.
Okay, so you can buy a really nice tailored suit for, let's say, $1,500, $2,000, right? There we go. See, Bayshore Travis chiming in here to save the day. He's been keeping me going, Judah, while you've been talking in a tunnel. Yeah. All right. So let's say, today you go out and you buy a suit, nice pair of shoes, and nice tie and shirt. What's it going to cost you? $2,500, $3,000, just about the same cost as it would in a gold coin that was stamped for $5, 150, 200 years ago, right? However, the dollar amount, the $5 that it would have cost you back in the day, now costs you $3,000. That is a perfect example of inflation and right. What it can do to, what it can do to the cost of daily goods and services. Now, with that,
doesn't seem like a lot in the short run, or today versus tomorrow, or last year versus this year, but over 20 years and the compound effect, it really adds up.
That's exactly right. So, what are some causes of inflation? Right, surplus of money. And this can either happen by excessive lending, where you just have more money pumped, excessive cheap lending, or printing more dollars. Right? That's typically the cost.
Right. Inflation is dollars, too many dollars chasing too few goods.
There we go. So inflation isn't necessarily all bad, but there are some potentially bad effects of it. You know, some of the things that can cause, or some of the negative impacts here are stagflation. So what is stagflation? Do you know, Judah? Or you want me to jump in?
Yeah, it's when you have inflation, but you also have a stagnant economy. So if the GDP grows by 3% a year and we have inflation of 3% a year, that's pretty much a wash. Now, obviously, some people are going to argue with that because certain segments get hit harder than others, but that's okay. When you don't have a growing economy and you have inflation, you have a stagnant economy and inflation, hence the term was coined stagflation.
Well, so let's put a practical example here. When that hamburger costs you more money next
But
year,
you're not making more. But you're not making more in wages.
Exactly, you're not making more in wages. My father-in-law, he was a meat cutter, right? When he graduated from high school, he got a job working at a butcher shop, and he was making about $14 an hour. Now, at that time, $14 an hour could support a family in a blue-collar neighborhood,
right?
With one income.
$14 an hour back then was good money.
But it was a good working wage, right?
Yeah.
What do you think he made after he retired when he went and got a part-time job down at the down at the grocery store working as a meat cutter?
Probably like $12 an hour.
$12 to $14 an hour, right?
Yeah.
Pretty much the same wage that he had years ago, but it sure can't support a family of four, or a family of two, or a family of one for that matter.
Right.
So, that's an example of stagflation, where costs go up, but compensation, the size of the economy, growth in the economy does not change. If we touched on this a little bit. If you have, if you've got a large savings account, if you're putting your money under a mattress, people that are savers get hit pretty darn hard when it comes to inflation. And then, decreases in value of the currency and hyperinflation are two other aspects that are not so great when it comes to inflation. Now, the photo here is from the Weimar Republic in Germany. This happened after World War I, where Germany was they lost World War I, and as a result, they got piled on by all of these bills that they had to pay. Right. So they got to pay all these bills, and they didn't have the revenue to do it. Their GDP wasn't big enough, their tax base wasn't big enough, and so what did they do? They printed a bunch of money.
Right.
Seemed like the right thing to do. Well, hourly workers went from having pay days to pay hours.
Right.
So like every day at noon, people would be off for 2 or 3 hours so they could take their pile of cash. You have a dump truck, back up and dump all this cash. They could take that to the market right away and buy their food, because tomorrow it was going to be worth a whole heck of a lot less. We saw this recently in Venezuela, where, most of the people that are living in that neck of the woods right now have a relative in the U.S. that sends them cash. That's just the way it is. So there are some really bad things that can happen with inflation, but there's also some positive aspects to it.
Correct.
Right.
Some much needed economic factors are caused by a slow, steady rate of like 2% inflation.
Right. So what might they be, Judah?
Well, for one, it forces economic development. So, it's great when Ethel who's 85 years old, wants to sit aside and save her money and has been a saver most of her life that she's now going to live off of. If Ford Motor Company realizes that they can actually make money because we're in a deflationary cycle by sitting on their money and not putting it to risk, and their money is worth more, then why would they ever invest their money? Why would they come out with a new car that they need to build a new factory for, or take the risk of going into new markets? So economic activity is sparked by mild inflation because businesses need to produce something and be productive with their capital so that it is worth more tomorrow than what inflation is going to slowly bleed away.
Exactly. And it incentivizes people to lend, to invest, and to put money out into the market at a rate that's higher than inflation, but a lot of times not a heck of a lot more.
Right.
I mean, really, it pumps a lot of capital into development, which leads to growth, which in turn often leads to a little bit more inflation, but it also leads to a higher standard of living. Better capital improvements, better places to live, business growth, wage increases, the whole 9 yards. So that's some positive aspects of it. Now let's talk about what we're looking at now with our current monetary policy. I know you've been really on top of this, Judah, certainly more than I have. I've been just kind of watching and smiling and nodding my head. Every time I see something from the Fed come out that says, "Oh yeah, we're going to have low interest rates for 3 years," it's like, wow. It hasn't helped anybody trying to find a new home. That's for sure. But those people that are buying right now are doing really great.
Yeah.
So, some of the impacts of our current monetary policy, essentially the Fed has said, look, number one, we're going to do whatever we need to do. We're going to throw the kitchen sink at this as many times as we have to make sure that our economy doesn't tank the way it has in the past. That's the first thing. The second thing is we're going to keep interest rates at a very, very sustainably low rate for as long as we need to, so we can come out of this, economic downturn that we've been dealing with since COVID, right? So again, cash is a depreciating asset. If you've got a $5 bill in your pocket right now, you should either spend it or invest it.
Correct.
That's it.
Convert capital to goods in some way, shape, or form.
That's right. Because they're probably going to be worth more or cost more tomorrow than they are today.
And the Fed is doing everything they can to cause inflation. So they realize that we haven't had enough inflation over the past 10 years. And so the Fed is going to start breaking out the big guns to cause and spark inflation. And they might overdo it.
Well, so you have 4 kids. I have 3. One thing that really struck me was kind of this feeling of deflation with back to school spending. Like, I don't know about you, but like I go into a store and I'm like, oh yeah, there's the $200 jeans or shoes or whatever. There's a pair of shoes for $200. And then right underneath it in small little letters, it's like discounted up to 90%, 90% off, whatever. I bought a pair of shoes from Under Armour that were like $140. I walked out of the store with them for $60, and like, they're great shoes. They're brand new. They're, you know what I mean? They're like, whatever. But you've got on one hand, these inflationary actions by the Fed, but in a lot of markets right now, these companies are in such need for cash, and just cash flow, that they're discounting their products. And
especially on the retail cycle, especially on the retail side, I was amazed at the quality of clothes that I could buy from Target the past 2 or 3 weekends at the prices that I could. It was stupid what's out there and what's available right now.
Yeah, right. And so Bayshore chimes in, it's like TJ Maxx sales. That's like everything's on sale all the time.
Yeah,
and there's something to that. But at a place like TJ Maxx, that's what you expect, or Marshalls, or whatever else. But in a retail store where their manufacturer's suggested retail price is the price of the product, when they start discounting, that's a little unnerving. And I think that some of these actions by the Fed, they're really warranted just to get the economy going, to put money in people's pocket and get them out there and spending. Interest rates are staying low for the foreseeable future. And even though I've been a naysayer when it comes to, the real estate futures and like the midterm.
I watched Friday's show. I heard you.
Yeah,
I heard you. I heard you saying that I'm the perpetual optimist, and you're the you're the naysayer when it comes to. I'm not saying that all this inflation might not cause a problem. I'm not saying that it won't or can't or isn't. I'm just saying we're not seeing that right now. We're not, and I think that by the time we start to see changes, that we will have time to adjust if we're paying attention and if people pay attention to watching a show like this one. So as of right now, interest rates are low, going lower and staying low. Real estate values are high, going higher, and rents are high and going higher. Vacancies are very low. I think that everything right now points to it being an awesome time to invest in real estate, buy your first home, or buy, a move up home and things like that.
Well, I'm not even saying that it's a bad time. Like if you find the right deal in the right place and the numbers make sense for you, I'm all about it. I guess my comment has been more so that there are a lot of economic indicators that foretell a different future than we're seeing right now. And that's I guess it. Yeah, all right. So we'll put that aside. I think that with the likely inflation rates that are either here or coming, we've got, real estate is a great place to be. In fact, using the illustration of like when we went off the gold standard in the 1970s, there was a really famous trader, and of course I can't think of his name off the top of my head, but he was just getting started as a trader at that time. And he figured that he would go in Monday morning after Nixon made his announcement that we're going off the gold standard and the market would just tank. And the absolute opposite happened. And the reason for that is that investors realized that, look, we're likely to go through inflation here. And because we're going through inflation, if we have these assets, if we have these hard assets, they're going to go up in value and they're going to buoy with the increase in the increase in prices. The asset prices are also going to go up. So even though, look, real estate's expensive right now. I think it's too expensive. But that doesn't matter what I think. If in 2 years from now we don't have a correction, prices are going to be even more expensive, and they might be double. Where they sit.
I don't think that real estate is expensive. I think that the economy has been slagging, and that we need more economic growth and development, and wages need to grow and catch up. And I think that that's what's going to happen. I think that real estate is going to get more affordable, but I think it's going to come through economic growth, not through a fallback in prices.
Okay, that's a fair comment. That's a fair comment.
I agree with you that I think they are not as in balance or not as favorable as what they have been in the past. I mean, I also think the other thing to remember here is, and I hate to say it this way, but we are living in unprecedented times right now, and all of these factors that people talk about with, when they look back over 30 or 40 years, the U.S. is very clearly the world leader and dominates the world in currency ways, in ways that it hasn't ever before. And it doesn't look like that's going to change anytime soon. Listen, our obnoxious buffoon of a president just said to number 2 in the world, China, hey, by the way, you've got to go ahead and sell that app, or else it's not going to make me very happy. And they bent over backwards to make it happen as soon as possible. So the U.S. and the U.S. dollar is the world's leading currency, no ifs, ands, or buts about it. And if inflation starts to raise its head in a very usually the Fed raises interest rates to cut inflation, right? So we're already basically at zero. So we're going to start doing things to cause inflation. So we're going negative, right? We're going to be printing money and doing other quantitative easing things like that to create inflation. If inflation gets out of hand, all we have to do is let our foot off the gas and then start applying the brake. You know what I mean? Like we're actually putting more bullets in the gun to fight inflation should it ever raise its head by first trying to create and cause inflation.
Okay. So that cyclical reasoning, I think that's a little cyclical reasoning. However, let's see how this plays out with or should play out with your long-term holds and with short-term fix and flip projects, right? Long-term holds, real estate's a way to be. I mean, it's a great place. You get leverage on your money. People are always going to need a place to live. It's very unlikely that we're going to have major structural changes in the way that the investment properties are treated. Unless there's some socialistic takeover of the economy, there's going to be money to be made in real estate, right? In the long term, for sure. Short term makes me a little bit less certain. And the main reason is that the economic pressure that's there.
Right.
Like a few ticks in the wrong month or 2 or 3 month stretch could be a tough pill to swallow. So if you're looking to flip a property, my advice would be make sure it cash flows. Just make sure it cash flows. Then, hey, worst case scenario, you refinance the thing or do it, a takeout loan or whatever, and turn it into a long-term play. And if it cash flows, you're not going to get hurt by it.
It's always been hard to be a real estate investor. It's actually it's why it's hard and it's difficult to find and make and do a good deal in real estate, which is why being a real estate investor has always been such a coveted thing to do and be. So we shouldn't be surprised when it's hard to do it, just because after 2000, when the stock market took a little bit of a tumble, real estate became very attractive. And then because of subprime mortgages, real estate became very attractive for a while and has had another run up here. Real estate's been more popular than maybe it should be the past 15 to 20 years. But that doesn't mean that real estate is not still a solid investment. And, it's very common for people to buy real estate and break even or only make a little bit of money the first 2 or 3 or 5 years. And the real money is made on these properties over the long haul. You know what I mean? If you want to buy a property that cash flows $200 to $300 a door, well, right away from day one, all that means is you're going to have a lot more tenant headaches and problems and issues and challenges. I bought a property once that only cash flowed $20 a month when I first bought it. And guess what? At one point, it even went on to cost me about $100 a month because of the escrow and things like that. At the end of the day, I ended up making a lot of money on that deal because it was a long-term buy and hold. And after 5 years, I made out really, really good on that. So, don't. A lot of people, they believe this. A lot of people believe this hype that real estate is get rich quick, and they know that they shouldn't believe it, but part of them still does. And it's because of inflationary cycles, and it's because of principal reduction, and it's because of the ability to raise the rent, that in the long run, real estate is going to be very, very profitable for you, and you should buy as much of it as you can afford to buy and save in your personal sense and make economies. Don't buy a new car. Don't go on vacation. Do whatever you can to save, to buy as much real estate as you can.
Dude, I don't know if you saw on Friday, we were talking about, oh, doggone it. You were talking, I just lost it. But the bottom line is what I was trying to say is, anytime you're investing, when's the best time to buy? Yesterday.
Yeah, yesterday. Well, you guys were talking about that with Bitcoin and stuff like that, and how the Walsh brothers there are seeing some crazy things happening in the stock market and things like that, and with Tesla. So yeah, I mean, I think that there's an old Chinese proverb that says the best time to plant a tree was 20 years ago. The second best time to plant a tree is today. So don't beat yourself up about not investing in real estate sooner, and don't beat yourself up about the risks associated with real estate. Buy real estate. I'm working on a large commercial deal with somebody right now, and it's going to break even cash flow from day one. And I had to explain to them the frame of mind that typically in commercial, you talk about how many months am I going to lose money on this before I start making money, and the fact that it can be break even to slightly positive. It's going to make about $5,000 a year, not a whole lot from day one. That's unheard of. I mean, I see when you look at the historical record of what real estate returns, over what a typical real estate deal looks like on day one. What does a typical real estate deal look like on day one? If you look at that over the past 50 years, real estate right now is what it looks like. It's hard to find a property that you can buy, fix up, and flip for tons of cash. It's hard to buy a property where you can buy it and rent it out and make tons of money from day one. The reason you're investing in real estate and saving up for that down payment and doing that deal is because of what it's going to do for you over the long haul. And what it's going to do for you over the long haul is unheard of financially. There's almost nothing else out there like it.
We did the numbers last week, and it's 100% return on investment, and annually, 100%. If you amortize it out or you break it out over a 30-year period, that's great. It's really great.
Good show, Josh.
Good show today, guys. Thanks for joining us today. Make sure you like and share our show. We will be back here tomorrow at noon with some more real estate conversation. Thanks a lot. You guys have a great day. Go make lots of money.
See you, everybody.